Hello, everyone, and happy Friday. It is Friday before a long weekend for me, and so I wanted to take a moment to just share what's going on today in the market, and also give you guys an update on the prior trades that I had discussed and some of the strategy for 2024. So, you can see here, this is today's chart of the SPY, or the S&P 500. And so you guys know I've been in this short position for the S&P 500 since this area last week, really. And I've been holding on to my short position because it's not like a straight put option, and it's definitely not a straight short of the ETF. It is a short call spread. So that means it's a little bit less risky situation, as well as it gives you more time. It gives you a little bit more leeway in the time frame. So you all know that my stop for this particular trade was the all-time high here on the S&P 500, which was 477.55. Now, it has pushed through that high. Yesterday and today, it has pushed through that high, but it has not closed at that high. So you can see today, the closing price, market just closed. The closing price is 476.68. And you can also see that it hasn't actually closed there above this red line. So this is the daily on the left, and the weekly is on the right. So it's a little bit maybe more clear here. So this week is this big green bar, which isn't great, but definitely went against what I thought was going to happen. I very much thought that this market would kind of reverse and roll over here. So if I share the daily chart on this right side of the screen, when it broke down below this 20 moving average, actually it's not a great candlestick pattern. Both of these, especially this one, hammer style, like reverse hammer style candlestick pattern, is really negative underneath this 20 moving average. But the market did make a big comeback and has pushed its way back up to this all-time high. It has been on lower volume, as you can see, lower than average, but it's still not great for my shorts. But the good thing is I have short calls, and they are above this 475 level, 477.55 level. Actually, they're 475 short. The short call is 475. So that means that it has to close below 475 by the time my option expires, which is not until the end of next week. So I do have two of them. As you can see, I have an order to buy them back if there happens to be a big down move. It'll buy my call option back for a profit, or I can let them expire if the market does turn over next week and it goes below this 475. So in a general sense, S&P 500 is pretty bullish. Actually, it's still showing some bullish tendencies. So based on the weekly chart, we'll have to see if this is going to end up being some sort of a double top, or if it continues to go. And if it continues to go, I'm just going to have to stop out of my position. So until it closes above my stop, which is 477.50, I'm not touching it. So for now, I'm holding on to this position. So that was one of the opportunities that we talked about in my last video. I think the other one is XLE, which was oil. So this is from last week. I'll go ahead and open up XLE. So you can see I've highlighted a little bit where it has actually what it's done since we last spoke about XLE. So this is the weekly again on the right, the daily on the left, and what we had actually talked about is oil. So let's start there. We had actually talked about oil staying below this, or pushing below this purple line here, which is a complex trend line. So I mean, this is the weekly again on the right. So it did start to come, like it had a pretty bearish week, went down actually below that trend line last week, and started pushing back up. And then it's kind of just, it's like hovering here in this range. I mean, it's back and forth in this range around this purple trend line. So I was able, so I trade, so I am short energy through XLE. So I did have a short position on XLE. I had some puts, which, let me remove this so you can see it a little bit better on the daily, which did really well because the last couple of days it has fallen quite a bit, and I've already sold out of my puts as of yesterday. So not the full move, but most of it. So like these two big red bars I got to take advantage of. I still think crude is going to go down a little bit more, at least in the short term. And so I'm really looking for this pattern on XLE to kind of finish, this kind of topping pattern, right? So you see on the right side on the weekly, there's some sort of a topping pattern happening. So, you know, the target, if I were to look at this on the weekly, because I am a swing trader, I don't look at too much on the daily chart for like the full view of what's happening with the product. So you can see, I mean, we can do a lot of things as far as trend lines, but I mean, in a general sense, you know, this line right here around this area, 76, 77 is kind of where I'm looking on XLE for it to go on the weekly. I mean, I don't know. I mean, it could go up, come down. You know, it could take a while to get there, but any up move in the XLE, I am probably going to fade. So obviously I'm out of my puts right now, but on the daily on the left, you can still see we're still in a downtrend. This lower high is not great, but I mean, again, it could just be consolidating. So if it manages to consolidate and stay within the range of the downtrend, I'll still look for an opportunity maybe to short it, you know, before it gets up into this 86 area, as long as it doesn't rather get up into this area here and break the trend. So for now, there is a downtrend still in XLE. I mean, let me just physically show you based on the trend line on the daily chart. So this is kind of a rudimentary trend line here, just showing you that this is in a downtrend, right? Lower highs and lower lows previously to this low here, which we have to keep an eye out for. So as long as it doesn't get back above this trend line, I'll probably reshort it if it goes up. So that was the second, I think, opportunity that we talked about on my last video. And then finally, I think TLT was the other option that we discussed. And it actually, you know, it hasn't really been doing what I would like it to do. So I haven't entered any position in TLT, but I was thinking in the long term for this, let me get on the monthly, because I think that's what I was showing y'all last time. Yeah, so on the monthly, my target is this area for the medium term. You know, rates aren't going the direction necessarily that everybody thinks they're going to go. Obviously, we had a stronger than expected CPI report yesterday, which caused the market to kind of flush, and then it made its way back up. So there's some uncertainty there around what the Fed is going to do based on the fact that the CPI was hotter than expected. So I'm expecting it potentially to kind of hover into this area. So I'm just waiting for a move for an entry to get into a longer term position, a long position, shorter term. So maybe it comes down, like consolidates down here and then reverses. So I'll look for that on the daily chart. So that's what I'm looking for right now on TLTs. I'm just waiting for an appropriate entry. If it doesn't, I mean, this is, again, if it goes below this last low over here, I'm probably going to wait and not get into it, just because that's not really a great sign for a bullish move. I'd like it to stay above this 20-week moving average. And really on the daily, I'd like it to stay above this 50-day moving average if it can. But anyway, still pending an entry on TLT. All right, so finally, I'm going to show you all, really maybe not finally, but at least a little bit of insight back into the Russell 2000 and the weakness in Apple, and then finally ending with a little bit on crypto, because how can you not? That's all over the place in the news right now, and with the ETFs being approved. So let's get into the rut real quick. So the Russell 2000, we had talked about potentially it being a makeup trade for 2024. In December, on my trading strategy for this year, I talked about all the other markets being at all-time highs or near all-time highs. And the Russell really just was a laggard and kind of in this range down here. And so I had mentioned this box, or I'd put a box in on the monthly. Actually, if you look at the monthly, it's better to see. And I was looking to say, okay, maybe it pushes through and is kind of a makeup trade in the first quarter of the year, which is usually, January is usually strong for the small cap stocks. It looks like it's done literally a failed breakout and reversal, which is what it looks like to me, just based on this chart. And so I did not enter any kind of Russell trade. And in fact, I'm short Russell and thinking about getting shorter Russell after this failed breakout. Just right now, I'm just doing it with call spreads, because again, the market's been pretty unpredictably volatile recently, and I'm not really looking to put too much at risk in this trade. I'd rather look at trades that I can get long in, maybe like utilities, something that does well in a recession, which I think we're set to enter. So the Russell 2000, I just have some call spreads within this box. If you look at this box, and I have it through IWM. So let me share with you what vehicle I'm using to trade it. So IWM, of course, is the ETF that follows the Russell 2000. And so you can see here, this is kind of where it broke out of this range, where the arrow is. That bar right there, that kind of reversal bar, is what signaled to me when it closed back in this range and then started to break down. That signaled to me that it was time to maybe go short, or definitely not go long the Russell. So my call spreads that I sold were in this area a couple of days ago. So not like up here, but right here after it closed underneath that range that I was listing as the breakout range in gray here. So it can do a lot of different things, but my thesis on the Russell 2000 is that it comes all the way back down into this gray, or near this gray area. It's pretty much in a chop range here. So if the market continues to be weak, if Russell continues to be weak, I anticipate either just a drift lower or some move lower close to this 175, 170 range, and maybe even down all the way back to this 166.50 area, which is the top of this range down here that it's been spiking down to in these moves. It could stay around 170. So my target for this is going to be 170 to 175. So I've got the call spread, and depending on what it does next week, like if it continues to go down, then I'll just hold on to my call spread and maybe buy one put option. If it comes back up, I'll look to get a little bit shorter. Like if it starts to bounce up to this breakout range again, and rolls over, I'll probably buy a few puts rather. And I'll let y'all know when I do that. So I haven't done that yet. I just bought these, or sold these call spreads this week. So that's the IWM, which is a little bit weaker. And then the last stock I'm going to talk about, the only stock I'm going to talk about is Apple. And so we know Apple's been showing a little weakness compared to where it has been after the bad news it got earlier in the year, late December, early January. And so you can see it had this huge gap down, even on the weekly chart, a weekly gap down. And then this what I've marked out is the gap, right, that was left between the December and January, like the end of the year, December 29th and January 2nd time frame. So my expectation here is that Apple will grind up to this, maybe the gap, maybe just this 50 average, So depending on what it does, you can see the last 2 days haven't been green like the ones before, but it could, crawl back up here. It could even fill the gap. So if it gets up to the gap and has a bar that is negative and rolls over, I'll look to get short Apple. If it continues to be strong and closes up in the gap, I'll wait till it goes through and fills the gap, and then I will short it. You can see an example of this here. And actually, it didn't fill the gap fully. In this case, it was weak. You can see Apple, had a gap back here in August, gap down, really, really weak, and actually really kind of reversed quickly and went into the gap. And then had a double top here. Actually, this isn't really a double top. This is lower this day. And then rolled over. So a really good short entry would have been right here in this stock. So that's what I'm looking to happen again. I'm looking for that same pattern. So whether it's going up a little bit and then failing and coming down, as soon as it crosses back down below this level, I'm going to be prepared to short it. So Apple's the only stock I'm looking for as a short right now, because I feel like I've missed a couple, like Tesla, which was really good. Tesla was a really good short opportunity over the past several months. You can see, and it's even weaker, really weak today too. It's not doing great. So it continues to have lower highs and lower lows. So I feel like I missed that move a little bit. So Apple is the only one that looks interesting to me on the weak side from the tech perspective. And I feel like tech has been strong, but going into a recession, it's probably going to weaken a little bit. We have some sectors like semiconductors and AI that are strong, and of course there's still some tech stocks that are strong, showing strength, like Google, etc. But I think Apple's a good opportunity if you're looking to take a position short in tech while not taking the entire tech sector short. And there are parameters around it. Identified those parameters. You can't go short if it gets up above this gap and continues to go. You just have to nix that trade and look for something else. So we've talked about Apple. We've talked about RUT. We've talked about SPY and energy. Let's finish off today's video with a little bit on crypto. So as you all probably all know, Bitcoin ETFs have been approved, and I'm going to share with you an article here. So Bitcoin ETFs have been approved this week on Thursday, yesterday. So a lot of ETFs have been created and are in place right now, 11 of them to be exact. And they're with big companies, like Grayscale is one of the more seasoned ones that's been around for a minute. And we also have Fidelity has one, ARK has one, BlackRock has one, although I don't see it listed here. And a lot of these big iShares, big ETF companies are now holding Bitcoin ETFs that investors can put their money into. The good thing about these ETFs is that these companies, according to the rules of the ETFs being created, they have to actually hold Bitcoin. They have to actually have Bitcoin, some Bitcoin, in order to actually have these ETFs in place. So, and let's go back to the charts. I'll share with you the Bitcoin futures. I won't look at each of these ETFs, but just looking at Bitcoin futures. Okay, so this is, and I think Bitcoin has been pretty bullish this year. I mean, it has. I don't think it's gone up 100% plus this past year. And so we're in a situation where let me go to the monthly on this guy. So it's come down from 69 down to 14ish. Now it's back up in the 40s. So pretty big reversal. I mean, it's made it all the way back up to the 61.8% retracement on Fibonacci, and it is kind of hanging in there. It hasn't completely fallen apart, although it did have if you look at the daily, it did have kind of a spike when the rumors of a Bitcoin ETF came out, and then the actual news in confirmation, there was if you hadn't heard, there was a hack of the SEC's Twitter account or X account. And there was some speculation that the ETFs had actually been approved. And so it did have a really big spike up. And then actually when the actual news came out, it's been going down ever since then. It hasn't been, just super strong. I mean, actually Ethereum has been doing much, much better than Bitcoin. So if you're looking to get into Bitcoin at all, you're able to now do it through these ETFs. So that was the last thing I wanted to share with you. I will come back with a new video this weekend, a little bit more comprehensive video and some trade ideas. Sorry about the ring noise. Until then, take